Welcome back to Investing Talk Podcast. Today, we're taking a really crucial look into Bakkt holdings. They're a key player, you could say, in this constantly shifting digital asset and cryptocurrency space. Our mission here is to unpack their recent financial performance, these pretty significant strategic shifts they're making, and what it all really means for the company's future, and importantly for you, whether you're just watching the space or considering an investment. We've gathered some, I think, compelling insights to help cut through some of the noise and understand what's truly going on. Before we jump in, if you find value in what we do, please do take a moment to subscribe, maybe leave a comment. Your engagement really helps us bring more of these deep dives to you. And hey, if you really like what we do, maybe consider buying us a coffee to support our work. We'd appreciate it. Okay, so let's get into this. Bakkt's most recent financials, Q1 2025. What's really striking here, I thought, was the net income. It hit $16.2 million, which is a huge jump, right? 176.5% year-over-year increase and about 140% up from the previous quarter. That actually beat analysts' expectations, so it's just, maybe some positive momentum on the profit side.
It does look good on the surface, that net income figure. But what's really interesting and maybe a bit confusing for listeners is when you look at the revenue numbers, we're seeing conflicting reports here. One suggests Q1 revenue was $1,074.9 million. That's up almost 26% year over year. But then another report puts total revenues way lower at just $12.6 million. And that's actually a decline of about 26% year over year. Apparently that lower figure is largely because transaction volume dropped sharply, like 40%.
Wow, okay. So huge difference there. How do we square that?
Well, it's a really good question. The reports we looked at don't spell it out explicitly, but this kind of difference often comes down to different accounting methods, maybe gross versus net revenue reporting. Or it could reflect the major changes happening in the business, like segment breakdowns during these transitions and divestitures they're doing. The bottom line is it highlights a real challenge in analyzing Bakkt right now. You can't just take one number. And even with that higher revenue figure in one report, their quarterly revenues have generally been pretty volatile. So consistency isn't quite there yet on the top line.
That's a really important point. It shows why looking beyond just one quarter is so vital. So if we zoom out, look at the broader picture. Their trailing 12 months, the TTM revenue is $3.71 billion. But, and this is the big but, they're still struggling with sustained profitability. TTM net losses are around $30.78 million. And the TTM earnings per share is negative $4.42.
Right. And because of those negative earnings, you're not going to find a meaningful price-to-earnings ratio, a PE ratio, for Bakkt, which really stands out when you compare them to other profitable fintech or crypto infrastructure companies. Those typically trade with PE ratios, somewhere between 15 and 30.
So no PE ratio to hang your hat on. What about their overall financial health, like debt?
That's another area to watch closely. Bankit's debt-to-equity ratio is very high. It's sitting at 6.1. Now, just for context, in the diversified financial sector, you'd normally want to see that below 2.
6.1. Okay, that's quite leveraged then.
It absolutely is. It signals a significant amount of financial risk. And other metrics aren't helping much either. Things like return on equity, free cash flow, they've been weak, often negative. It all kind of adds up to what some analysts are scoring as just a fair financial health rating. That level of debt combined with negative cash flow puts real pressure on them.
Okay, so the numbers are definitely telling a complicated story. Contradictory even, which leads to the big question, why? What's driving all this? And I think the answer really lies in this major strategic overhaul they're going through.
That seems right. I mean, at its heart, Bakkt positions itself as this digital asset platform, right? Focused on crypto trading infrastructure, stablecoin payments, digital asset management, serving both institutions and retail folks.
But they're changing course now.
Pretty significantly, yeah. They're in the process of divesting businesses they see as non-core. Specifically, they're selling their custody services back to IC Intercontinental Exchange, their former parent. And they're also looking at options for their loyalty division.
So streamlining, basically, focusing down.
Exactly. The whole idea seems to be to concentrate resources squarely on their core crypto payment solutions. It's a big pivot. And it's not just cutting back, they're also building out. There's a new product pipeline, some key partnerships. They've got 2 major products coming soon. Bakkt Checkout, that's a widget for merchants, and Bakkt Agent, which is described as an AI-powered plugin for global money movement.
AI-powered, interesting. When are those expected?
Early access for premium partners is slated for Q3 2025, so pretty soon. And crucially, they've signed a strategic cooperation agreement with a company called Distributed Technologies Research, or DTR. The plan there is to integrate this AI-driven stablecoin payment infrastructure. They expect a full commercial agreement by Q3 as well.
So lots of focus on AI and stablecoins then.
Very much so. The goal seems to be delivering those merchant checkout widgets and also white label AI plugins that other businesses can use. And one more thing on strategy. Just last month, June 2025, they updated their investment policy. Now they can actually allocate company capital into Bitcoin and other digital assets as part of their treasury strategy.
Holding crypto on the balance sheet. Okay, that's a statement in itself. So big changes. How does this repositioning stack up against the competition? Where do they fit in now? It feels like they're still very much an emerging challenger, wouldn't you say? Not quite a market leader yet.
I think that's fair. When you put Bakkt next to, say, Coinbase, which is huge, supports tons of coins, often profitable, or Robinhood Crypto, with its integrated app and broader revenue streams, or even Circle, which is, a major force in the USD coin world, Bakkt is definitely carving a different path.
So what is that differentiation really?
It seems to be this focus on B2B, business to business, and what's called banking as a service, or BaaS. They're trying not to be just another retail crypto app. Their pivot towards AI and stablecoin payments for businesses could give them a unique niche. If they execute well, that's the key.
And what about the broader industry trends? How do those play into Bakkt's strategy?
Well, the general growth in stablecoin adoption certainly helps their pivot. That's a tailwind. But on the flip side, you have intensifying regulatory scrutiny around crypto that increases compliance costs, adds risk, and competition isn't letting up. You've got the big players like Coinbase also expanding their own B2B services. So it's a tough field.
Right, and they've made some leadership changes too.
They have. Recently brought in Ankit Khemka as Chief Product Officer and Philip Lord as President of Bakkt International, which you could read as them trying to strengthen the executive team, bringing in maybe fresh perspectives for this big transformation phase.
Okay, that makes sense. This brings us to, well, the really critical part for anyone thinking about this stock: valuation, risks, market sentiment. And one number immediately jumps out, that beta. It's exceptionally high at 5.26.
Yeah, 5.26. That's extreme volatility.
Explain that for us. What does a beta that high actually mean for an investor?
Okay, so beta measures how much a stock tends to move compared to the overall market, which has a beta of 1. A beta of 5.26 means Bakkt stock is expected to be theoretically over 5 times more volatile than the market average. So if the market moves up or down 1%, Bakkt might swing, 5% or more. It just amplifies everything.
So definitely not for the faint of heart. It really underscores this is a highly speculative play.
Absolutely. And that volatility ties into the risks. Looking at the recent filings, some major risks stand out. We already talked about the high leverage that significantly increases bankruptcy risk if their cash flows don't improve. That's a big one. Then there's the ongoing exposure to regulatory changes. The crypto space is still evolving, and new rules could hit them hard. The restructuring itself, selling off parts of the business, that can be disruptive to operations in the short term. And of course, underlying all of it is the volatility of the crypto markets themselves. Bitcoin goes on a wild ride. It affects Bakkt's business and sentiment around the stock.
Execution risk seems huge here too, with the pivot.
Immense, especially given their current financial situation. A great strategy doesn't mean much if you don't have the stability or resources to pull it off.
Okay, so with all that risk and volatility, how has the stock actually been doing lately? And what's the general feeling out there?
Well, as of July 1st, the stock closed at $14.07. And true to that beta, it's shown really high volatility. On that day alone, it moved almost 11.7% intraday. Just huge swings. There was a bit of an uptick after that positive Q1 earnings surprise we mentioned earlier, but overall, looking back over the past year, it's been sharp ups and downs, really tied to crypto sector sentiment and any news specific to Bakkt.
And what are analysts saying? Or what's the buzz on, say, social media?
It's kind of mixed, leaning towards cautiously optimistic, maybe. People seem interested in the new products, the AI angle, the partnerships like DTR.
Yeah.
But it's a big but. There are clear concerns about those declining core revenues we discussed, and also the fact that the company suspended giving quarterly guidance because of the restructuring.
Ah, suspending guidance. That always makes investors a bit nervous, doesn't it?
It does. It signals uncertainty, even from management's perspective. They're basically saying things are too much in flux to make reliable short-term forecasts.
Okay, so let's try and pull this all together then. Where does this leave us with Bakkt Holdings? It seems pretty clear it remains a speculative investment within this digital asset infrastructure sector. We do see some positive signs, right? Clear steps towards profitability, cost controls, selling off non-core parts. Plus, these partnerships and the product pipeline look promising on paper.
Definitely positives to point to. But the crucial counterpoint is still there. That ongoing decline in core transaction volumes and revenues is worrying. Combine that with the high debt, the extreme stock volatility we talked about, and the very real competitive pressures from bigger, more established players. It really tempers any sort of, aggressive buying enthusiasm right now. It's a bet on future execution turning things around.
So the overall take from our analysis today lands on a hold, but with, let's say, cautious optimism for some upside if those new product launches really hit the mark.
Precisely. Success hinges almost entirely on executing these new initiatives, the checkout, the agent, the DTR integration,
Yeah.
especially given how tough the competition is.
So for you, our listener, the advice is really to monitor those upcoming product rollouts very closely. Keep a sharp eye on whether they gain traction. And always remember, this company operates in an inherently volatile sector. Expect bumps in the road. So let's end with a thought to mull over. Given Bakkt's really ambitious strategic pivot and just the wild nature of the crypto market, what would it actually take for a company like Bakkt to not just survive, but to genuinely thrive, to really differentiate itself and shift from being this emerging challenger to becoming a truly dominant force in the future of digital payments infrastructure? Something to think about.